Good guys, let's do a bit of revision as well as about 90% revision and 10% of the new work. In 2011, Johnny Ford, a qualified mechanic, saw a need in his town for a professional auto body shop, and on 1 April 2012 he opened Johnny's Auto Body and Panel Beaters. He also offers towing services and roadside assistance. By 2015, the business was thriving due to the professional work that he was performed. Johnny had recently received calls from various insurance companies that, because of his sound reputation, wanted to include his business as one of their recognized service providers. Johnny was very excited about this prospect, knowing it represented an increase in the business, but knew he would have to expand his fleet of vehicles and equipment. He approached a local bank and they agreed that they would finance his expansion and the new vehicles and equipment would serve as security for any loans. Basquiat has been Johnny's bookkeeper since the business opened, and although she was comfortable with recording the day-to-day operating activities, she had very little experience in transactions involving disposals of property, plant, and equipment. She concentrated on ensuring that the entries to the bank were correct, but knew she had made many errors in recording the various transactions. She convinced Johnny to allow her to review work and make any corrections. Johnny's Auto Body and Panel Beaters is a registered VAT vendor, and we have to work with a 14% VAT rate, but you will see in the answer that if you've missed a 14% there, I also gave you the answer if you did work on a 15%. Remember the test or exam, you will always receive 15% because it's the current VAT rate. Good. Then you only treat with other VAT vendors unless otherwise stated, and that is important information that you should take note of. Good. The following balances were supplied to you on the year in 31 March 2015. Now they gave you, oopsie, that's too far. They gave you tow trucks. There you are. Tow trucks, 380,000, accumulated depreciation, service vehicles, accumulated depreciation, general shop equipment, accumulated depreciation. And now we have a funny year. Service vehicle traded in. That's a rubbish account. You should not have an account like that, and it should disappear out of your books. The same applies to this one. Proceeds on the sale of equipment, both of them. It's also a rubbish account, and that should also disappear out of your books. You will never have an account with proceeds. You will always have either a profit or loss on the sale of an asset, and never an account of service vehicle traded in. We will see how that entry came about. And then specialized paint machine and accumulated depreciation. Your investigation revealed, amongst others, the following information that needs your assistance. Service vehicles. On 31 July 2015, Johnny traded in an old service vehicle, so that is an opening balance there, with a cost price of 165,000 Rand and accumulated depreciation on 1 April of 99,000 Rand. So 1 April, definitely the beginning of the current financial year, and then after that, I have traded in this vehicle. So the first thing that immediately must come to mind is that I have to provide for depreciation from the 1st of April to the 31st of July, 4 months. The dealer gave Johnny 60,000 Rand exclusive of VAT. So you have to convert it to a VAT inclusive figure if you want to work with that, or have to do the journal entries for that, for the old service vehicle towards the purchase of the new service vehicle. The only entry Basquiat made for the new service vehicle was to credit the bank and debit service vehicle trade in. So that is how that account came about. So what did she do? She said, well, I don't know what to do, but I know that for this new vehicle that I get in exchange for the old vehicle that I've traded in, I have to pay in a certain amount of money, and that certain amount of money is 153,900 Rand. So I don't know how to deal with the cost price sort of issue and getting the old thing out of my books, because clearly she didn't take the old vehicle out of the books, because here she still says, sits with proceeds on the sale of equipment. So that means that the only thing that she's done is to pass the bank entry. Service vehicles are depreciated at 20% on cost. Good. Now, the first thing that you have to do is prepare the journal entry to correct the recording of the trade-in of the service vehicle on 31 July 2015. Prepare the journal entry to record the trade-in and prepare the journal entry. Oh, that's the service vehicles. That's the only thing of the service vehicles. Okay. So let's go back to this one here. And let's take the old service vehicle out of our books. Well, first thing is provide for depreciation for the current year. Then take the old vehicle's cost price out, accumulated depreciation out, determine what is going to be the cost price of the new service vehicle that we have acquired. Good. The depreciation on the vehicle that we've traded in. They've told us that the depreciation rate is 20% per annum on the straight line basis and that the cost price of the vehicle traded in was 165,000 Rand. We also traded it in 4 months after the start of the current financial year on 31st July. So there's 4 months that we've used the vehicle. So our total depreciation then is 11,000 Rand for the 4 month period that we've used the vehicle. We would have debited depreciation, statement of profit or loss, 11,000 Rand. And for the new guys who have now joined us, whenever you write a journal entry, you have to give the statement indication, otherwise you're going to lose marks in a test or exam. And then accumulated depreciation with the other 11,000. Now the question told you that there was an existing accumulated depreciation of 99,000 Rand at the beginning of the year. So therefore, when I want to take out this vehicle out of my books, I say, well, the cost price was 165,000. The total accumulated depreciation at the date of sale is 110,000, which is the 99 plus the 11,000. That gave you a carry value as at the date of sale of 55,000. And then they've told you that we have received 60,000 Rand exclusive of VAT. So the VAT exclusive amount will go to your asset disposal account, which is 60,000, and that then will give you a profit on the sale of that vehicle of 5,000 Rand. So let's take the total accumulated depreciation out of the books. We will debit accumulated depreciation with 110,000. Let's take the cost price of the vehicle out of our books. So we're going to credit our service vehicles at cost price with a cost price of 165,000. And we're going to take both those entries to our asset disposal account. You could have done that in 2 separate journal entries. I've just combined the 2 into 1 entry. So my asset disposal account will be debited with 55,000 Rand. Good. Now, how much did we receive from the dealer? We received exclusive of VAT 60,000. So the VAT inclusive amount would have been 68,400, which is the 60,000 multiplied by 1.14. So we have received from the dealer, but not in cash because it was a trading transaction, and we have just settled the difference, what we owe the dealer at the end of the day, the 153,900. So we have received 68,400 Rand against the dealer's account, not bank. We would have taken the VAT output to the VAT output account, 8,400, and the VAT exclusive amount of 60,000 to the asset disposal account. If you worked with a 15% VAT, you still would have taken 60,000 Rand to the asset disposal account because that's the VAT exclusive amount. 9,000, so 15% of 60,000 would have gone to the VAT output. So in total, against the dealer's account, you would have recorded 69,000 Rand. Good. Now, what is the purpose of the asset disposal account? It is to work out either the profit or the loss on the sale of that asset. So now we're going to clean out the asset disposal account, and for that we need an entry on the debit side. So we're going to debit the asset disposal account, and we're going to credit the profit on the sale of that vehicle of 5,000 Rand. Now the trading transaction is now halfway done. We have gotten rid of the old service vehicle. We still have to record the new service vehicle in our books. We have already determined that we've received 68,400 Rand for the old vehicle, which is, let's do that like this. Said we have received 60,000 Rand exclusive of VAT for the old vehicle, and then we have paid, but the amounts that we pay include VAT. We have paid 153,900 Rand for the old vehicle. So if we take out the VAT, what did we actually pay VAT exclusive? 135,000 plus the 60,000 that we received for the old vehicle, which give us the cost price of the new service vehicle of 195,000. Alternatively, you could have said, well, we've paid in 153,900. The VAT inclusive amount that we've received for the old vehicle was 68,400. That gives us a total VAT inclusive amount of 22,300. And now if we take out the VAT of 1.14, that will bring us back to the cost price of the new service vehicle of 195,000 Rand. So we're going to debit service vehicles with a cost price of 195,000 Rand. Let me just put you that this is just when I worked out the same computation based on a 15% VAT, but I'm going to stick with the 40% now. So we're going to debit our service vehicles with 195,000, that 195,000, which is at 14%. We're going to pay or claim the VAT on that new vehicle from the receiver of revenue. So 195,000 multiplied by 14%, which gives us 27,300. And we're going to credit the guy who we owe the invoice amount of the new service vehicle to, and that is the dealer. So we're going to credit him with 222,300, which is there, 222,300, the total amount of the new vehicle, the invoice price of the new vehicle. Good. Now, what is now the balance lying on the dealer's account? There's a credit of 223,300. No, just have to move back and move to back, move to go back and move to go back and move to go back. Right. And here we had a debit of 68,400. So 68,400 debit, 223,000 credit, and that miraculously gives you a net credit figure of 153,900. Now we must clean out that rubbish account that's lying in our books, service vehicle trade-in. So we're going to credit that account with the amount that's lying there, 153,900. We're going to debit the dealer's account with 153,900, and then I have rectified that stupid account that's lying there, service vehicle trade-in. I've eradicated that. There's no balance left on that account. And also, I have cleared out my dealer's account. There is no balance left in that account as well. So the dealer account, there I've actually put that, was 222,300 less 68,400, which is 153,900 credit, which I have now debited, and I took it out. The next part of the question is all about the tow trucks. They tell us to cater for the additional business. Johnny purchased a top-of-the-range, fully loaded new tow truck with an invoice price of 484,500. What does invoice price means? It means it includes the VAT. So what is the VAT exclusive amount? The VAT exclusive amount is then 425,000 Rand. Good. Johnny estimated the residual value to be 25,000 Rand exclusive of VAT at the end of its useful life. Now, before I'm going to talk about the residual value, let's quickly check what is the depreciation policy based on tow trucks. Tow trucks are depreciated at 15% per annum on the diminishing balance method. So the diminishing balance method is the only method where we ignore, in inverted commas, the estimated residual value. And the reason for that is that that estimated residual value is already built into this rate of 15%. So therefore, although they give us the estimated residual value, I'm not interested in that because I have the percentage that I have to apply based on the diminishing balance method. The truck was delivered on 1 June 2015 at an additional cost, exclusive of that, of 2,500 Rand. So what is the actual cost price of this new truck? It's a 425,000 Rand VAT exclusive amount. This is a VAT exclusive amount of 2,500. So the total amount, cost price of the new truck, 427,500. On 30 June, all the specialized equipment was installed into the tow truck and it was ready for use. Guys, at what stage do we start writing off depreciation? At the date that it was ready to be used. During July, the staff underwent training and the tow truck began operating on 1 August 2015. Now that is irrelevant because this truck was ready to be used on the 30th of June. So when we're going to do depreciation, it will be from the 30th of June onwards. Mosquito correctly recorded the purchase of the new tow truck and the installation costs. Tow trucks are depreciated at 15%, which we have read already. Now, prepare the journal entry to record the depreciation of the tow trucks for the year ended 31 March 2016. Good. When did we buy the tow truck? We bought the tow truck as at somewhere along the line, but it was ready for use on the 30th of June. So let's go back and let's do the journal entry. Good. The cost price we said is 484,500 less the VAT included in that amount. That gives us a net VAT exclusive price of 425,000. The delivery cost was 2,500. We've already established that the cost price of this new tow truck was 427,500. We have used, since the date that it was ready to be used, which is in June, 30 June, it is then from 30 June up to the end of March 2016, a 9-month period that has gone by. So the cost price, 427,500 times 15% times 9 months equals 48,094. Now, here we also have to record the old depreciation. So on the tow trucks that we had in the beginning of the year and still have at the end of March 2016, we also have to have a look what is the depreciation based on those tow trucks. Here, out of our list of balances or our list of balances that gave us on 31 March 2015, as in the beginning of the current financial year, they've told us that tow trucks had a cost price of 380,000 and accumulated depreciation of 121,766. So therefore, if we're going to use this, we said, well, our old is going to be 380,000 less accumulated depreciation of 121,766 multiplied by 15%, give us then 38,735 Rand for depreciation on the old tow trucks. So the total depreciation is those two together, 86,829. That one is just to show you if we worked on the 15% VAT. I'm going to stick with the 14% because that is what was asked. So what is going to be my depreciation charge for the year? Depreciation is going to be debited with 86,829 and accumulated depreciation is going to be credited with 86,829. Right. The next part is all about the general shop equipment. Due to the expansion of his business, Johnny had to employ more staff and purchase more general equipment. At the beginning of December 2015, he purchased new equipment. Date important. new equipment with an invoice price of 105,000. Invoice price always inclusive of VAT, which Maskia recorded correctly. His brother Jim, not a VAT vendor, who had a shop in Durban, offered to buy some of Johnny's older equipment, to which Johnny agreed. On 1 February 2016, Jim bought equipment with a cost price of 30,000 and accumulated depreciation at the date of sale amounting to 11,500. So you don't have to work out any depreciation because they gave you the accumulated depreciation as at the date of sale. So you can assume then that they've passed the depreciation for the year under review. As his brother was paying cash, Johnny gave him a cash discount of 5%. Now, what I gave you is the actual amount that you've received. You received 22,800 Rand for that equipment. So therefore, you don't have to bother with the 5%. The 5% has already been deducted when we actually work with the 22,800 Rand. Good. So let's see what we had. We had equipment with a cost price of 30,000, accumulated depreciation of 11,500, carry value at the date of sale, therefore 18,500. We have received in that proceeds account 22,800. What belongs to us? Only the VAT exclusive amount, which is 20,000 based on 40% VAT. So we made a profit 1,500 Rand on the sale of that equipment. So how are we going to record that? We're going to take the total accumulated depreciation out of the books. We're going to debit accumulated depreciation. We're going to take the cost price of that asset out of our books. We're going to credit general shop equipment cost price account, 30,000. We're going to transfer both to the asset disposal or asset realization account, 18,500. Then we have to record the proceeds. How much did we receive? 22,800. So now we're going to debit. We've already debited the bank. We can't debit bank again. We have debited bank in the past and credited the proceeds. Now we're going to debit the proceeds account, and in the same breath we're going to get rid of that account, debit the proceeds on the sale of equipment, credit our asset disposal account with a VAT exclusive amount of 20,000 and credit VAT output with 2,800, which is the difference between those two. And then the profit on the sale, we need, in order to balance off the asset disposal or asset realization account, it's the same account, guys. We're going to debit, we need a debit entry there of 1,500 Rand, and we're going to credit the profit on the sale of the equipment, 1,500. Again, please note that each and every entry is accompanied by the statement indication. Then we've seen that he has purchased new equipment at the beginning of December with an invoice price of 105,000, and you have to depreciate it at 10% on the straight line method. The general shop equipment, we have to record the depreciation on the general shop equipment for the year ended 31 March 2026. Good. 105,000, we take out the VAT, multiplied by 10%. We've used it for a period of 4 months. So that gives us then a total depreciation charge of 3,070. Now the equipment that we had in the beginning, less the equipment that we've sold, we still have that equipment and we still have to write off 10% depreciation on that equipment. If you go back to your trial balance here, general shop equipment, there was the 175,000. That was as at 31 March 2015. So thereafter we have sold equipment of 30,000 Rand. So therefore, if we want to work out the depreciation on the remaining general shop equipment, there was the cost price of 30,000, that is what we've sold. Then we still have to work out the depreciation on the remaining equipment. So the 175 less the 30,000 multiplied by 10% gives us 14,500. So total depreciation then will be 17,570. So our accounting entry will be depreciation debit 17,570, credit accumulated depreciation 17,570. The last part of the question is all about the specialized paint machine. The specialized spray painting machine was purchased when the business began. At the time, Johnny estimated that the machine would last for 5 years, and it was depreciated on the straight line method. At the time that the machine was purchased, the manufacturer estimated that the machine could spray paint the equivalent of 800 vehicles over its useful life. So that's the total capacity of the machine. By the end of March 2015, the records indicated that the machine has spray painted the equivalent of 280. This is the important date. So this is up to the beginning of the current financial year. So by March 2015, it has already spray painted 280 vehicles, and during the year ended 31 March 2016, a further 110 vehicles had been spray painted. Johnny has decided to change the depreciation method to the units of production to apply, and that needs to be applied retroactively. Now, what does that mean in plain simple English? That means it is the cumulative catch-up method. You have to go back to the date of acquisition of this asset, you have to rework all your figures, and then you have to do the necessary accounting entries. Number 5 here asks you to prepare the journal entry to record the depreciation on the specialized paint machine for the year ended 31 March 2016. Good. So the first thing that we have to work out is, if we go back to we could have worked it out, but they actually gave us the figures as at 31 March 2015. The specialized paint machine had a cost price of 340,000. At that stage, it had an accumulated depreciation of 204,000, so we have the carry value of the spray paint machine as at the beginning of the year. Now, because we're going to do the cumulative catch-up method, or going to apply these changes retroactively, we're going to start at 340,000 again. We're going to say, well, I don't think there was any estimated residual values, but the total capacity of this machine was 800 vehicles. So we're going to take the 340,000 divided by 800 Rand, and that is going to give us then the value that we're going to write off as depreciation per vehicle. So if we take the 340,000, going to divide it by 800, that's going to give you 425 Rand per vehicle. Now, they told us up to the beginning of the current financial year, we have already spray painted 280 vehicles. So that means that actually we wanted the accumulated depreciation at the beginning of the year to be 119,000. However, in our books, the actual amount that is lying there is 204,000. So the first thing that we have to rectify is we have to make the 204,000 119,000. And the only place that we can rectify it against is our current year's depreciation charge. So obviously we want to make our accumulated depreciation much less. So we're going to debit accumulated depreciation and credit our depreciation charge for the year. For the current year then, we want 425 Rand per vehicle multiplied by the number of vehicles spray painted for the year, which is 110 vehicles. So our current year's depreciation is going to be 46,750. That on a separate line, 46,750. Good, so let's see how our journal entry is going to look like. depreciation was 340,000 divided by 5 years, 68,000 Rand per unit. Our new depreciation, we've just worked it out, is 425 Rand per unit. Accumulated depreciation, we said we wanted it to be the 425 multiplied by the number of units manufactured up till the beginning of the current financial year, 280, which gives us in total accumulated depreciation that we actually wanted in our books of 119,000. How much do we in actual fact have? We have 204,000. So we've said that debit against accumulated depreciation that we want to post is 85,000 Rand, the difference between those two. And that is our catch-up. We also said that our current year's depreciation is 110 units multiplied by the 425 Rand per unit, which is 46,750. So our total depreciation charge for the year is our actual depreciation of 46,750 less the 85,000 credit against depreciation and debit against accumulated depreciation, which is our catch-up, and that will give us then a net credit against depreciation for the current year of 38,250. So accumulated depreciation will be debited with 38,250 statement of financial position, and depreciation in our profit and loss will be credited with 38,250. What is the impact on the current year's profits, guys? The impact on the current year's profits is 68,000 less the 38,000, well, plus the 38,250 because this is a credit. So that will give us a positive impact of, if you add the two together, is 68,000 plus 38,250. That gives us a positive impact on the current year's profits of 106,250. Now, if you want to work out what is going to be the impact on future profits, you had to deduct there from the 136,000 against 68,000, get the carry value at the end of the year like it would have been if you did continue with the old method, and then you're going to compare that. There's no estimated residual value, whatever you're going to get there, which is 136 less 68 gives me against 68,000. You're going to compare that with 174,250. 174,250. So this change in estimate will have a negative impact on future profits of 106,250 Rand.